Now, Best Buy and Circuit City, they reported earnings today. While Best Buy's profits rose 18%, Circuit City reported a loss because of holiday discounts and expenses to let go 3,400 workers. Now, what's Best Buy doing right that Circuit City isn't? And what's best for investors? Joining me to help answer this question is Jonathan Cramer, analyst at Cowen & Company. Welcome, Jonathan.
Thank you.
I got to first ask you, Best Buy comes out, says 18% EPS increase, and the stock tanks. What's going on here? What's happening at Best Buy? Is this because everyone anticipated the good results?
Well, I think the long-term story is still intact. I mean, the results today demonstrate why Best Buy is the leader in the consumer electronics space. You know, their long-term story is based on, one, a strong product cycle, two, gaining market share, three is driving newer or emerging growth initiatives. All those are still intact.
Let me just ask you about the product cycle, because I want to ask you there, is this just flat panels? Is this what's really been driving the sales at Best Buy as well as Circuit City? Is it everyone's in love with flat panel televisions?
Well,
and
flat
screens?
panels is certainly a key driver in the cycle, but we also have other cycles. You need to look past TVs. You have video games, which are ramping this year with all three new consoles out and several drive titles in terms of games. You also have Vista, which should improve the replacement cycle for computer hardware.
So in your estimate, what was the reason for the trade down in the shares of Best Buy? Was it just some profit taking, or why weren't people impressed with the 18% increase?
The two main concerns expressed were, one, the capital allocation. People wanted Best Buy to be a little more aggressive on the share buybacks and to be less focused on acquisitions in international areas such as Turkey. The second thing that people were concerned about was the guidance, which appears to or implies to be back-end weighted, which can add some risk profile to the story.
What does that mean when you say back-end weighted, that the sales were going to be coming at the second half of the year?
That's correct, sales and profits. And this is traditionally, seasonally, a second-half story.
Now, tell me about, Best Buy has been moving into China as well. They made an acquisition there. Do you think that China is going to be a big market for them, and do you think that this purchase was wise at this time?
Well, as Best Buy normally does with either acquisitions or expansion, they're focused on returns, and returns have to meet their corporate average, which is one of the highest in our sector. We think that they're doing a smart move by taking just baby steps in the country, learning the customs, learning customer demand.
Let's talk about Circuit City. We'll go back and forth, but I'm just going to get you, we've got 30 seconds. Circuit City, were the results expected?
Basically in line with expectations. The turnaround, long-term turnaround, is still intact.
Okay, well, if that's the case, just quickly, do you have a rating on Circuit City right now?
We have an outperform.
Still an
outperform. We think it's a long-term turnaround.
Okay, all right. We're going to take a quick break. When we come back, I want to ask you a little bit more about Best Buy, about Circuit City, but I also want to get your thoughts, Jonathan, on Radio Shack. We're going to talk Radio Shack. The stock is up 60% so far this year. We're going to figure out what's driving the stock and should you consider buying the shares. Jonathan Cramer is here to answer these questions. You're watching Market Pulse. Welcome back. We're with Jonathan Cramer, analyst at Cowen & Company, and we're talking about consumer electronic retailers, specifically Best Buy, Circuit City, and Radio Shack. I want to ask a little bit about Best Buy because I want to find out, what about the competition? It's okay, Best Buy has posted these very good results, but what about competition from places like Walmart or Costco or even online retailers like Amazon? Are they going to eat away at Best Buy's market share?
It is a very competitive space. The direct retailers like Amazon are definitely eating into the market. But we feel Best Buy has properly positioned themselves to maintain and gain market share. Part of that is by providing services and differentiated merchandise that direct retailers can't. Additionally, they have superior customer experience than if you go to a Walmart, whether in products or customer service.
So you don't think that the price differential is going to be great enough for people to move into a Walmart or to, let's say, go into a Best Buy store, find out the brand or the item that they want, then go home and then log on to Amazon and buy it there?
That's certainly an issue, and that's both Best Buy and Circuit City are addressing that with their service component. You talked about service. I just want to, before we move on to Circuit City, I want to get you Best Buy. Do you have a rating on Best Buy or a target? We have an outperform on Best Buy.
Any target on the price right now?
We don't have price targets at Cowen.
Okay, but an outperform on Best Buy. Let me ask you this about Circuit City. They jettisoned a lot of their Canadian operations. They had announced previously 3,400 workers, higher paid workers, are being replaced by lower paid workers. Schoonover, he's the CEO of the company, came from Best Buy. Can he turn Circuit City around?
We think he's the right person to turn the company around. Already he's been able to drive margins from basically flat several years ago to about 1.2% today. And he's bringing in new merchandise, new people to drive store productivity.
Well, let me ask you, I mean, you know, is Circuit City always going to follow in the wake of Best Buy? I mean, Best Buy has got the Geek Squad. That seems to be an area that they're trying to differentiate themselves with the customer support. Is Circuit City doing something similar?
They're doing something similar. They have Firedog. You know, Best Buy is the leader, the dominant leader in the consumer electronics space. It's going to be difficult to dethrone them. But what Circuit City can do is narrow the gap between them and Best Buy. And there's a lot of room to cover.
Now, what kinds of new products are going to continue to drive sales? I mean, if the price of flat panels continues to fall, if there's price competition on video games, you talked about that being a big market, what's going to bring people into the stores?
Well, you have to have location. Location is key. Make it convenient for people. The customer service component, both in-store and at home, whether it's installation of your TV or fixing your PC.
Are you at all concerned that Best Buy, Circuit City, they've got very big stores, they've kind of saturated the big store environment, and now they're going to end up with having to open smaller stores, which might hurt their volume? Is this something that is going to be a concern?
I think it is a concern, but also an opportunity. There are certain categories that are shrinking, such as packaged media, which consists of DVDs and CDs. That category is shrinking, so you don't need as big a box. So to improve returns, shrink the box.
So what kind of products are we talking about here? Are we talking about DVD recorders? Are we talking about the TiVo brand style of being able to record television programs? If we're going to get all this, you know, internet and content over the cable or over the satellite, are there any killer products that you think are going to be coming in 2007?
Well, it's always hard to tell. No one could predict how popular the iPod was. Right now, we don't see anything on the horizon, but again, you never know. And I think that's the interesting part of consumer electronics.
Okay, so you got a question mark there, to be fair.
Yeah.
Okay, now let me ask you about a company that's going through a restructuring. We're talking about Radio Shack. They got 6,000 locations. Radio Shack used to be the place you went to buy cables or plugs, and now it's the place where you go and buy mobile phones, handsets, as well as prepaid phone cards. Is that a good strategy for Radio Shack?
You know, what Radio Shack is doing now is focusing on making themselves competitive in the space. Basically, they have a new CEO who is trading comps for returns. Basically, he's driving shareholder value out of this mature retailer.
When you say trading comps for returns, what does that mean in English?
That means he's not just trying to drive market share or people into the store. He wants to make sure that each sale is profitable.
But isn't like a prepaid phone card or aren't the handset business, isn't that brutally competitive? I mean, is that going to be a business that, what's the barrier to entry to other people coming in and selling it, either online or other retailers?
It's very competitive, and Radio Shack acknowledges that. And what they're doing is realigning their cost structure to set the platform for sustainable growth so they can bring in products eventually that will drive store traffic.
Let me ask you about Julian Day. He's the CEO. He came from Kmart. He came from Safeway. He's regarded as something of a turnaround artist. The stock, as you can see here, up 60% in the last 3 months. Do you think the stock has room to grow with Julian Day as the head of the company?
We think longer term the stock has room to grow, especially if they can bring in new products and drive that store productivity. That will be key for their long-term growth.
What about opening kiosks? That seems to be part of Day's plan, opening these smaller stores that focus just on selling handsets. Isn't that going to be a saturated market? I mean, what prevents someone else from opening a store within a store like at a Walmart or at a Costco?
Actually, those kiosks are legacy businesses that Julian Day inherited. And what they're doing is trying to improve the profitability of those kiosks.
And, okay, well, how are they doing that, do you know?
By taking costs out of the structure. And by lowering the bar, you can become more profitable on lower sales.
When we talked about service, you talked about that being a differentiating factor for all three of these companies. What does it say when a Circuit City lays off 3,400 people because they're getting paid too much? How are they going to hire people with the same quality of service or the same level of experience?
I think you have to look deeper than just the headline. A number of the people that were laid off, which is unfortunate, were back office people being paid above market rate. For the company to survive, to be competitive, it has to realign that cost structure.
So this was not people that were interacting with the consumer?
Very small amount we're interacting with the consumer.
Do you think that this gives Best Buy, though, an opportunity to go and take some more market share away from Circuit City now that they've got this 3,400 people out of the picture?
There's certainly a possibility with some near-term volatility in sales.
Okay. All right. We're going to have to leave it there. Thanks very much.
Thank
Jonathan
you.
Cramer of Cowen & Co. talking about Best Buy and Circuit City.